In this video, I'm going to teach you how to get bias with the understanding of just a fair value gap. Yes, and you don't need to understand market order flow or any other PD array or any other complex concept. You just need a fair value gap to understand how to get bias, and it's really simple. So take a look at this chart. For example, I'm going to explain with charts. So this is the daily chart on your USD, and how am I going to get a bias here? Now one way is to look at the trend. So the trend is bullish and I'm going to go bullish. I'm going to have a bullish bias on this, but that's one way, and it can be wrong as well. For example, look at this retracement from here to here. So if you were looking at chart from here, let's say here, you were bullish seeing the trend, look at what you had to go through. So it is simple. So you actually wait for a high to be taken out or a low to be taken out. So in this case, if we look into this right here, we see a high being taken out. What you want to do is to mark out the nearest fair value gap. So this is the nearest fair value gap, right? We can clearly see that. Now, once the price takes out this high, it doesn't mean that now we are going to aim towards this fair value gap. We have to go to the low time frame and then we will see confirmation there. Once that confirmation is there and we see that, that's when we are going to trade towards the fair value gap. So I have this fair value gap marked and I would expect the market to come back lower, but let me first go into a low time frame before actually confirming that price is coming lower. So I'll go to the 1 hour in this case. So if you are looking at an M15 and you are expecting price to go to an M15 fair value gap, then your low time frame is going to be M1, and it differs for every single time frame. So let me go to the H1 chart here. So this is the H1. Now what I need is a pattern like this. So a market structure shift, this is the market structure shift. Then I want to see a high being created, and once that high is created, I want to see it taken out, and once it's taken out, I want to see a break lower. So once that break lower happens, that's when it's confirmed that it is going lower, and that's when I will expect the market to come down lower towards this fair value gap. So now let's play the market and let's see if we get that. So we don't have a market structure shift yet. This is where our, if price closes below this candle, that's when I will say it's a market structure shift, but there is none yet. So I'm waiting. Now we get to see that, but this is not the confirmation yet. What are we waiting for? We are waiting for a high to be taken out and then a break lower. So still nothing there. We still don't see any high being taken out. Still nothing. This is the high that I want to see being taken out. Let's see if we get that. We still don't get that, so we are still not gonna enter here. Now we have a high being taken out. Let's see how the market reacts from here. Another high is taken out. Now this is like an up close candle. I would love the market to close below this candle. So if market closes below this, that's when I would actually enter into a short position. So let's play this out, and still no close here. Now that market actually created a new low, I would now look into this low and I would want a close below this low here. Okay, so we have this high that is taken out. Then we have this candle and price closed below here. So this is our confirmation. This is my entry and this is what I would target. And you see price just goes there. Now the other way of entering here would be waiting for this fair value gap, and you can do that, but I just simply don't do that. I just enter as soon as price closes below, or you can call this a change in state of delivery. So as soon as that happens, I just enter there.